Okay, let's get you a market voice. Shailendra Kumar. Okay, but just want to mark the Nifty bank, by the way. That's up about 1%, keep in mind. But anyways, as I said, let's talk about that and more with our market guest. Shailendra Kumar, Director and CIO at Narnolia Securities, joins us right now on the show. Good having you, Mr. Kumar. Thanks so much for taking the time out. What are you telling your clients to do currently? 11,063, we are comfortably above those levels. But it's been a sharp rally, pre-budget rally, if you want to call it, in January. Can this market give further returns in the run-up to the budget?
Sure. So, Neeraj, the basic premise is like from the Q2 of this financial year, so Q2 FY18 results. Thereafter, if you look at the overall market, for S&P 500 index, there are 500 constituent stocks, right? Out of 500 stocks, about 230 of them now have a EBITDA margin of more than 15%, right? And the profit growth for these, almost half the company of the overall basket is more than 15%. So this kind of a financial positive results by the Indian corporate has to translate into rising stock prices. So this 11,000 plus, of course, is a very morale boosting for all of us into fund industry or brokerages or media as well, who had been telling Indian people to participate more in the equity. So this is a more of a our belief becoming correct or proven right. So it's a very positive point, and I think from here on also there is no need to worry, because the kind of earning growth we are seeing even for the Q3 results, I think we have a very decent upside left even for this calendar year.
In fact, a number of voices that we have been hearing in the beginning of this year pegging the Nifty target for 2018 between 11,000 and 11,500. We are almost at 11,100, and this is just what 2/3 of January that we have seen so far. What do you expect here on? What kind of targets do you have in mind?
Yeah, sure. So this 11,000 kind of level that many brokerage houses came with, but basically based upon the FY18 earning. Now everyone will be rolling forward their price estimate on FY19, because now we are just a year away from FY19 closure, so March 2019. And if you look at the consensus earning estimates for FY19, it's almost like a EPS of 600 for Nifty, right? Now, if you take a 600 EPS for Nifty and you just give a 20-time multiple as a PE for Nifty, say coming December of 2018, you get to a figure of about 12,000. So, like this 11,500 surely will be seeing a upward revision. And the target will be getting higher than 12,000, because even if the earning estimate that we had in our brokerage firm is like 565 for FY19, if I take a 21-22 multiple, we are very safe to say like target for this calendar year would be anything 12,100 plus.
Shailendra, the pack which is contributing to the gains that one is seeing is the metals pack. Actually, it's all the commodities which are doing well today. Anything from this space that you guys like?
Okay, so metals, see, right now metals are more to do with how the globally metal prices are moving. Also, bit of expectation is there in the budget that there will be like some kind of reduction on, say, steel scrap, or maybe some kind of a import duty reduction on, say, coke. I believe net these metals are more of a tactical call, where you buy basically from a trading perspective, and when the global metal prices see any kind of a downside, you exit. So I'll not be recommending any metal name, though we have recommended lately Vedanta and Hindalco to our clients, but those are more of a tactical in nature, less of a long-term investment basis.
Mr. Kumar, the perennial question that people would have is that in a scenario like this, ahead of the budget, is there something that people should watch out for? And if we're making an investment right now, should one make an investment in the large cap space vis-a-vis the mid cap space, which is showing, or small cap space, which is showing some signs of pressure at higher levels too? So what are your answers on both of these? If you can share one key thing that investors should watch out in the budget, and no point talking about long-term capital gains tax, because that's an unknown entity. Anything else that you believe people should watch out for? And if you have a large cap idea that you would be telling your clients to invest in currently.
Fine. So if you look at the budget right now, see, our macros are already very nice. So the macro overall in economy is trending pretty well. I don't think budget will be making any material difference, particularly in the negative side to this prevailing sentiment. So it will be again an event, because see, if I look at the budget structurally, if last 3-4 years, even if the 3% fiscal deficit target get delayed by one financial year, say it goes to FY20, but the kind of spending that the government is doing over the last 3 years, so your revenue spending has grown by 7.4% since 2014, but the capital spending has grown up by 16% plus. So if this kind of a spending trend remains there, I don't think budget and a little bit of fiscal math going here and there and bit of a tax moving one side or the other side will have any material impact as far as the stock market overall trajectory is concerned. It will be mostly earning of the corporate driven. Budget will come and go, it will not have material difference, barring if there is some surprises on the direct tax reform where we have a we don't feel much of a higher probability of happening something on the direct tax side. As far as the large cap, mid cap, small cap theory goes, I think this is a division which will not be lasting. So last 2 years, because the mid and small has done phenomenally better than Nifty, so it has become a kind of market we are dividing into 3-4 segments. It will be all about good stocks, so good quality stocks, whether it's a small cap or a large cap, will be rewarded by the market going forward. And changing or switching a style or making a tactical proposition somewhere like so reduce your weight from small cap and add to large, I think will not work. It will be all about where you see higher earning trajectory, which all managements are having a right strategy where they will be able to scale up their businesses in 3-4 years, whether they are large cap or small cap, irrespective, they'll be rewarding the investors handsomely.
Well, if you were to pick up one large cap stock, Shailendra, which one would that be?
Okay, so lately we are recommending one stock called Mahindra & Mahindra. So if you look at Mahindra & Mahindra, like for last 2 years almost in terms of a stock price, it has not done much. It has almost traded sideways for last 2 years, and rightly so. If you look at their utility vehicle business, where they had a market share of upward of about 35%, that had got fallen to about 26%. So almost 10% of fall in the market share of utility vehicle has dented their business. If you look at in terms of financials, their asset turnover ratio fell from about 2 to about 1.5 currently, and the ROE similarly fell from about 20% plus to about I think 14.5% right now. But if I look at the last 2 quarter results, the other business of Mahindra & Mahindra, which is like on the tractor side as well as the pickup vehicle side, these 2 businesses are doing phenomenally well. So right now, say tractor business contributes about 32% to the overall turnover of Mahindra & Mahindra, and as the management has guided for in 3 years, the contribution of tractor business will be about 50%. Now, at the same time, UV or utility vehicle business has about 8 to 10% EBITDA margin, where the tractor has an EBITDA margin of about 17 to 18%. So now what is happening is like for Mahindra & Mahindra overall turnover, the things are moving towards the composition of the sales from UV is shifting to tractor. Also the pickup vehicle is doing phenomenally well. So on account of rising, so almost 18-19% volume growth is happening for tractor businesses. And this will ultimately, will see to it that the asset turnover starts moving up for Mahindra & Mahindra. Right now, we have a target of about 960 for Mahindra for say about 12 to 18 months.
Shailendra, in the same space, we get a lot of queries related to Tata Motors as well, a company which they say valuation-wise, it's cheaper if you compare it to the other large-cap auto companies. What's the view here? Do you expect any sort of turnaround for Tata Motors?
Yeah. So see, we are also positive on Tata Motors, but we have a difference of opinion whereas the street is concerned. So if you look at FY19, for Tata Motors, the profit estimate is almost like 70% growth over next 1 year. Now, we have a more conservative estimate there because the kind of expectation has got built about the new launches of Tata Motors as well as the kind of expectation is around reduction in the forex losses for Tata Motors. We have a little conservative view. So directionally, we also have a positive view on Tata Motors, but we are not that gung-ho about the stock.
Okay, so that's the view coming in on Tata Motors here. Shailendra, like you mentioned that it's possible for the index to go up, for markets to really go up from here. This is one theme that you have picked up. Are you focusing a lot on the segments which would probably benefit because of rural focus? Are there other ideas that you would like to focus on, maybe some of these sectors that haven't performed well?
Surely. So Mahindra itself is something, where like rural spending growth or farm income, say we have a belief that farm income will increase here on. So tractor, positive movement or positive favorable climate for tractor volume growth is because of that only. So that, but having said that, we should be like, so there is a consensus right now. A lot of people are talking that this budget government will do a lot on increasing the farm income. If it is about if that effort is basically in terms of building the logistics, say warehouses, the cold chain side of it, or maybe large investment into irrigation infrastructure, that's fine. If there is an effort to deliberately raise the farm subsidy in some way or the other, and we know for sure that anything done basically in that matter automatically turns into raising the rural wages and ultimately impact on inflation. So we don't believe that there will be a very general kind of a scenario to desperately push for rural wage growth, but there will be something on the basic infrastructure side which will be more towards improving the productivity of the agricultural chain instead of some kind of a direct farm rural wages kind of increasing things.
Shailendra, I have one last question from my end. The last 6 odd months have been months of the SME exchange really making its presence felt, and we've had some quality small cap companies, some of them leaders within their own pockets, come out to the fore and give good returns to investors as well. While the larger basket may be perceived as a riskier investment compared to large caps, I'm sure there are businesses and there are models which will stand the test of time and might be great businesses to invest in even at the current levels. My question to you is not from a perspective of a 3-month, 6-month time frame, but for somebody who's willing to park in money and watch that money grow or a longer time frame, say 3 years, 4 years. Are there any small interesting businesses that you guys have come across and have selectively recommended to your clients? If you can give an example of one of such businesses in the listed space.
Okay, so see the problem. So in a listed SME space right now, so there are two issues. The problem first I'll explain. So you don't have much of a research available on SME that much. The liquidity in the market is not very high. So for a larger brokerage firm,
No, this was not from a perspective of only companies listed on the SME. I was using SME as an example to tell you that small caps are also finding a flavor. So this does not be a SME exchange company. It could well be a small cap company listing on the main board exchanges.
Right. Surely there will be, already last 2-3 years, if you look at both in terms of SME exchange listed or maybe main board listed, a lot of small cap has now got a prominence. So many sub-segment of the economy where there are a lot of unorganized players right now. So few of those companies which are getting themselves organized more vis-a-vis the other players in the industry, and they are building a different kind of a product and services experience for their consumer set. They are surely coming up very fast. So there will be there are opportunity, and there will remain an opportunity. Right now, looking at the stocks that we have talked in the past, and looking at their valuation, I'll not be very comfortable at the current price point to recommend them. But there are many names. So there are many names. So in auto component, like also in a lot of people who are into kind of organized outsourced services business like. So if you take the large name, there are Quest Corp, which is we have talked about many times. But there are a lot of small players, maybe in security services. You have SIS, somebody who's ultimately some of the company where the management has a pedigree to scale the businesses. And there are a lot of unorganized players. And among those large basket of unorganized players, if 1 or 2 players are getting organized, showing right kind of a management bandwidth to handle or scale the business, they'll be rewarded. So there will be a lot of stories coming up from that segment of the stock market.
Okay, Shailendra, we'll leave it at that. Many thanks for joining us and giving us that perspective. That's Narnolia Securities.